Hey traders, this is my weekend video and some things I'm looking at right here going forward here. So we have a bloodbath to close out the week and stuff. So a few things real quick here that I'm seeing on the SPX. Okay, so we have this trend line right here that's all the way from 2019 has acted as a bouncing point. It's don't get me wrong, we have validated broke through it when COVID first came out, and you know. Uh, I think as COVID first came out, yeah. And we broke right through that trend line. But my point is that acted as a support area. We have not even tagged that yet. So if in that scenario, that would suggest that we're going to come down this week and probably get a hard test somewhere in this area right here, possibly creating an inverted head and shoulders pattern. The potential for an inverted head and shoulders pattern. That's the bullish case. Knowing that we have not even come into this support area and even tried to tag it yet suggests that this is a high probability thing. And our MACD is confirming that scenario. We're getting a strong now. This is not a subtle cross. This is a strong crossover. Okay, so this is typically a continuation pattern to the downside. So in my opinion, the best case scenario, we're going to be coming down this trend line, and then maybe we pounce and put in inverted head and shoulders. So I'm not going to count out bullish or bearish. I mean, both scenarios are very valid right here, but I do want to float this right here. This is a very significant signal. So it is very highly likely we're going to be coming lower first next week before potentially going higher. So I do want to float that idea for everybody out there. Okay, going to SPY here real quick. I'm keeping a really close eye on this post-election day. So basically the open print, I can't remember if I put the closing print. The closing print of November 3rd, that is right in this area. So it does make sense to me that, this is a magnet force to complete this pattern. So in my opinion, that is what they're ultimately trying to do. I just don't know how soon it's going to happen. So I do want to keep that and all of our signals are actually lining up for that. So do keep that in mind here. For a measured move from here, that's this high, and let me show you here on another chart. Give me a second here. Another view here on SPY. I do want to float here. This is a channel. This is a symmetrical channel. So we are back in fighting these COVID lows for a potential opening print to start the week. Break out of the COVID low trend. So be aware of that scenario. So another scenario I do want to float with you guys. If you go on a monthly time frame real quick here, and I'll show you real quick what I'm seeing. As you can see, this candle right here, that was a prior breakout candle on a monthly time frame. And now I go back on the daily real quick here, and I will show you since I find it. There it is for you. Okay, and zoom in here. So basically what I've drawn out here, guys, is the market maker move for the week. And if we were to happen to do a 2 standard deviation move, which is not out of the cards, if we were to do that, that's going to bring us right down into that 360 area. Okay, and that is what, in my opinion, would complete that pattern. So just heads up on that. Going forward here, I can't read that print over there. I'll put that on the left so you can read my text. And that's that was the prior monthly breakout. Okay, that would complete that pattern to the downside around the 360 area. So I do want to float that idea as well. Okay, some other food for thought that we're going into. We're going to be starting the week. The distance in your fib fan. Okay, I did put a fib on that distance. We were right down here at the 38. If you flip it over, it would be 61.8. So on a bearish case, it would be a 61.8. I drew it from the bottom up. Should have been the top down. But my point is, basically, if we break this level, we have the potential for a higher volatility move all the way down to our midline here on our SPY. That's also lining up with that 360, 365 area. So definitely keep that in watch. I think 360, 365 is in the cards for the week. So the last thing I do want to float out here, and that is our pivots. And so basically we are currently trading well below our quarterly pivot, below our monthly pivot, and we are opening this week well below our weekly pivot. So, it's a really bearish case going to start the thing. So, bottom line is, I actually made my money playing calls, believe it or not, Friday. But I was actually looking. My plan was that we were going to on some of these indices close near the weekly pivot, developing weekly pivot for next week, and we could not do it. We closed on right at the dead lows of the session. So guys, here on the monthly time frame on the Qs are acting really bad here. So I just want to float that idea here. So what we are here on a monthly time frame, we are inside of these prior candles. So I do want to float that idea that we are inside. We closed inside on a monthly time frame. We got 1 week to go. Hey, it went out 1 week, but we'd have OPEX this week. Okay, quad witching this week, quarterly expiration. I'm not saying we're going to get down there by this week, down to these lows, monthly support area, but it's something definitely to be aware of. The relative weakness is really strong here in the technology space with the yields over 3%. So it's really hurting it pretty good here. So bottom line is, you could see right here how this was a supporting area on the daily time frame. So it really looks like odds that we could be coming back down to this. So I do want to float this idea here. So in that case, I did not put the extension. This here is your expected move for the week all right now. Okay, so you're less than a 2 standard deviation move to actually tag that monthly support area. So definitely want to keep that one on watch going forward here. That's right around the 270 area. So we definitely that's definitely in the cards, in my opinion, the 270 area for this week with everything going on in the market. So Qs are acting a lot worse than what the S&Ps are. We are below the midline on that. So this is a more valid bear flag scenario because we have already given up that midline on the pitchfork. So definitely keep that one on watch as well going forward here. Like I said, the 270 could be possibly in the cards. If you zoom in here real quick here, and you come down here, you just let me move this over a little bit. The bottom of this pitchfork is right here in that 270 area. So this one here is also lining up with that possible scenario this week that we could be actually coming down into 270 on the Qs this week. So definitely keep that in the back of your mind. So some other things I'm looking at here, we do have relative weakness here on the technology front. We do have a gap below us here. When we had the election, we gapped up that day. We never did come back down and fill that gap. So that does, look like a possibility that we are going to be filling this election gap this week. So basically, everything tech will be have officially given up everything it had made since the election, since Biden's election. So we've already given up everything from the inauguration, but that would actually get us all the way back to the election day. So heads up on that going forward here. Ultimately, we could very easily be looking for this weekly 200-day moving average, which is right slightly outside of the Andrews pitchfork. So definitely keep that on watch here. And honestly, if you're actually doing a two standard deviation move to the downside, which tech obviously possibly could do, that would bring us really close to that weekly 200 moving average. So definitely keep that one on watch. That's the 263 area. So heads up on that in your trading. Now, if I am right about that, keep this in mind here, guys. This is year to date on the Qs. So if we get down to this election day area, we're looking at 32 between 32 and 35% correction, or that we possibly could be in for here to wait a minute here to finish the week here. So heads up on that going into OPEX this week. So that is a scenario. I'm not saying that the market is dead and we're just going to break down, but I do think these are very reasonable targets. I do not think the prior consolidation area is an extremely valid support area. So definitely, I do think they really want to take this gap out. So we'll see what happens here going forward on that. Also on SPY, I forgot to put that one whenever I was doing my SPY analysis. And look at this. We're at 18.4 right now. So I am thinking, before the week's out here, that, it doesn't take a hair's breadth. Just retesting these lows down here and this low candle here, and we're going to be officially in technically bear market territory with the S&Ps actually crossing the 20% correction scenario. So, and we've already done it once. So heads up on that. I'm really leaning to think, because my areas are even beyond the 20% for support. Yeah, since I'm already on this percentage thing, I want to go ahead and show the Russell. So basically, this is where we close. That's a 1 standard deviation move right there. I do want to point out, so if we break down, like I'm suspecting on the NASDAQ, and we fill that gap, well, we're likely to fill the gap here on the Russell as well. So, we do have this is an election gap as well. Well, correction. Election price was further down. We had a gap a couple of days later, okay? So it wasn't immediate on the Russell. So the gap's a little bit higher on this one because of that scenario, because we actually gapped a couple of days later on the Russell. So honestly, in all likelihood, we actually might take this one out, fill this one before with the NASDAQ, but we'll see what happens. So one last look at this view right here. As I want to say, once we've come back into this channel area, which we would do if we were filling this gap right here. In the past, we have not found support on these higher levels. So, you typically are going all the way back to the midline for your first supports. In that case, that suggests the Russell could be in the 160, the 155, 160 area before the week's out. And that would actually, there's another gap right below here. There's a secondary gap down here in this second area, suggesting that we might actually come down to this area. I don't have that one drawn out, but that would actually complete this pattern. So just heads up on that. I do want to float that idea as well. I do want to float, though, also at the bottom of this first gap right here. That is about a 2 standard deviation move versus what the expected move is right now. So just definitely be aware of that scenario. I don't think we're going to be coming crashing down this week, that entire move. But anytime you get beyond, you never know. In a bear market, the liquidity dries up and things can happen really fast. Okay, here's a secondary view using an Andrews pitchfork, to help get an idea. We are back. We have come up, tried to break above the Andrews pitchfork. We have rejected that as of Friday, suggesting this is another, just like the NASDAQ, this is a bear flag continuation pattern, because you have already broken, you are below inside the Andrews pitchfork. So it's well, no, correction. Correction. We're still, we're already back below the Andrews pitchfork. There you go. There you go. The candle's down here. There you go. So yeah. So what I was saying is correct. So heads up on that. Definitely. Post-election open, I got it on here. 160 area is your post-election open. So heads up on that. And one last view here of the Russell. You see the channel I got drawn? I got it as simple as I can. Okay. We do have a channel pattern right here. And if I zoom in right here, okay, that would suggest that, we could be retesting the channel low this week at some point. That's putting us right in that 161 or the 165 area for the channel low, possibly this week. These prior highs over here, we got a gap right below this. So 168 is our gap. So it does look like a high probability we're going to come down, test, or possibly even fill this gap. Like I said, that's the election gap. I don't have it drawn out on this chart. Okay, guys, I wanted to show you a year-to-date chart. The candlesticks are the SPX. Okay, and then I have from top down. Oh, whoops! I gotta zoom in a little bit better. Wait a minute, 1 second. Sorry about that. XLE was way off the chart. Okay, so bottom line is, guys, so what I'm looking at here, my main thing is how far XLE has, we're up 55%, where the rest of the market is pretty much flat. XLE has just been a beast all year. Some people are thinking that the XLE will come back in, and then the rest of the market will rally when XLE comes in. I'm not necessarily in that camp. Typically, a bear market, what happens is you get the first major leg down, you digest, you put a bear flag in, digest, okay? And that's not, and then the things that didn't sell off the first time, they tend to come down and reset lower, okay? They stair step down, okay? I've watched a couple of videos over the weekend where people are thinking, when XLE is going to start selling off, the rest of the market's going to rally, just run up, crazy. Okay, I'm not in that camp, so just heads up on that. If we are in a bear market phase, now granted, if XLE comes in and some of these defensive names come in and the others do rally, then we're still probably in a topping formation bull market. So just heads up on that going forward here. So my main takeaway right here, you see where SPX is right here, and I've got these lined up in order for as of yesterday's close. But what I want to point out here is XLF. So if we were truly, XLF is the next one right down here. So here is your uh, uh, SPX, okay? And that's the green line. Yeah, XLF is your green line right there, okay? So bottom line is, on a relative basis, XLF's just trading in tandem with SPY. It is not underperforming. And the reason that I'm bringing this scenario, this up on my charts here, I'm going to bring this up right here. This here is your market life cycle, okay, analysis, okay? When we're in an early recession, you tend to start seeing the financials underperform the markets. Right now, all we're seeing is the financials trading in tandem with the S&Ps. So that suggests we're still back into this area right here, in this topping area up here, somewhere up in this zone up here, right here. And we may have not yet put a swing high in this market. So I do want to float that idea, the fact that we do not have a relative weakness in the financials, which typically will give the initial signal, okay, that we are starting into a major correction. Some people are calling because the RSI is not continuing to go higher, it's exponentially more difficult for the RSI to go higher once you start getting to an extreme. But I do want to float that out, that we got a divergence going on here, and we're setting up for a correction in the XLE. Well, be really careful if you're trying to be a divergent trader in what could potentially be a bear market. Because what happens is, what the primary theme in a bear market that drives price is liquidity. And it's not the divergences. And bottom line is, because there's so little liquidity, the markets drop so much faster that it actually creates these divergences by nature, okay? Because liquidity starts drying up in a bear market correction. So you have to be extremely careful by using divergences to try to time a bottom in a bear market. It's much more practical to use divergences in an uptrend, and far more dangerous in a downtrend. I know this firsthand from 2007. I tried to trade these divergences back during the great crash. They were everywhere. And I tell you, they just didn't work. So just be aware, in a market correction, trying to time a divergence, that can be really dangerous. Okay. So right now we do have a pretty significant divergence happening with the MACD and the RSI. If the markets continue breaking down into another tier lower, which I think that's what we're doing, and I think this is going to be, I know a lot of people have been calling out the XLE. I feel much more comfortable in actually a short in the healthcare. So I definitely want to float that idea. This thing has not reset yet. We could definitely come back down to the, see, we're trading to 130, 140. This thing can definitely come back to the 110, 100 area, in any type of meaningful further correction in the market. And then the worst of your spiders is your XLY still. So heads up on that. And I do want to point out here, we are just fighting the top of this of uh, Andrew's pitchfork. You know, it's looking like we are bear flagging. We are broke back inside of that pitchfork. So heads up on that. You know, still holding support. So we'll see what happens going forward here. So definitely some things I wanted to float going forward here on that. And this was even more heavily weighted with Amazon, but now Amazon, so we'll see what happens with Amazon with the lower share price. It may not be nearly as big a weighting since the stock split after they get all the redistributions done. And I do want to float this idea also because there are so many shares now of XLY of Amazon in XLY because Amazon was one of the top holdings in the consumer discretionary. I could definitely see some fund managers doing distribution out of Amazon because of that, because there's so many shares available in this ETF. So in my last video, I finished it off by thinking Boeing was going to go up to the 150 area. Okay, so basically, we came down outside of the down to support, and I thought we were going to come up here and hold inside this Andrews pitchfork. Instead, we rejected along with the rest of the market. So this is really starting to look quite precarious, suggesting now that we're probably going to be setting up to come down to these prior lows, the $90 area. So heads up on that. So definitely keep this on watch. You know, this is not a healthy chart pattern. You don't even want to think about, really at this point, you don't, the 145, 146 area, you really don't even want to mess with it until it gets back up into that price range, 145, 146. It sure looks like it's a broke down pattern that's not going to recover. But see, I was calling out a low because we were down here. We put this, we were coming down into that, this lower area right here. Now that I'm taking that call off the table. So heads up on that. Okay, this is my Amazon chart. It got an massive upgrade for it last week. So I do want to point out here, so we broke back below our quarter 20 SMA, quarter 20. Okay, so this is a really ugly looking chart here, well inside of our pitchfork, suggesting we're going to be coming down, retesting the midline at the very least. If not, like I said, there's so many shares out there now, we run the risk that these fund managers in all these ETFs are going to uh, uh, want to liquidate some of those shares because there's so many shares in the portfolio. So Meta got a downgrade there Friday. And don't get me wrong, Amazon got a big price upgrade to 170, 175 a share, and they didn't care yesterday. But we got a downgrade for Meta, and Meta's closed right here on support. So it's going to be very, very critical how Facebook opens up there. If we're gapping down tomorrow morning on Facebook, this could get ugly really quick, real quick here, because we're breaking into another trading zone. So heads up on that. So we'll get below our MAs and everything. So be aware of those scenarios going forward in this session. And that's another one. We're below the quarter 20 SMA. Really ugly trade, ugly chart. Any of these are getting below their quarter 20 or quarter 50. These are ugly charts. Okay. So Netflix got a downgrade yesterday, and I didn't even put the quarter 20 on here. But Netflix got a downgrade. We've been fighting this quarter 50 SMA ever since the earnings. Okay, guys, that's why we stopped right here. This is our quarterly 50 SMA, and we've been stuck right here. It kind of looks like here on the weekly time frame that they were trying to hook it and find some buyers in there. But we did get a scathing downgrade there Friday, and it came down pretty hard with the rest of the markets. So heads up on that. So yeah, this is what's going on in the daily time frame. We're we're just stuck on this 50-day moving average. And as I said in my last weekend video, China internet was on fire this week. Some of these, like Alibaba and stuff like that. Alibaba had one day over 10%, so it was a really good day for them. Okay, the one last thing that I do want to talk about, we are right into a major inflection point here on Apple. The main thing I'm right here, we had a gap down right here, okay? We gapped down, broke down right there, okay? Well, I went ahead and put a channel in regards to that gap down area. That marked a breakdown into a different trading zone, and in which we eventually came back up and broke out of. Now, let me zoom in here and show you what we got right here. This gap down zone, we came right into the bottom of that gap, guys, suggesting we are entering a new trading zone to the downside on Apple to start the week. So I wanted to start this. I'm probably the only person that even recognized the seriousness of what Apple just did here. So that suggests to me that Apple's in a lot of trouble. And, you know, we might finish this week at very, very easily the 128.50 area. That's our inauguration day, 128.50 here on Apple. So I do want to float that idea as well. I think this is potentially a very serious scenario of a trend, a major trend, a potential trend change here for Apple. So heads up on that. So I hope you guys learned something. Please like my video, retweet them on Twitter if you can. Gumby9662C if you get a chance, and make some comments below and stuff, guys. If you're seeing stuff that I'm not seeing, please let me know, okay? And like I said, over 3%. I mean, it's risk off. It is risk off, and I'm running out of time here on my video, but I do want to point out. So if you do a scan off the weeklies, default weeklies. Basically all relevant stocks that have weekly expirations, they're all listed in this watch list. So, and I look for any of them over $100 a share. Okay, so there's 159 of them that pulled up. 147 of those stocks of the 159 closed below their weekly pivot last week. Okay, so heads up on that going into this week. Yeah, because it was a bloodbath. So it was like even the daily pivot, it was 72% of all stocks in on all the relevant stocks that over $100. 72% were below their daily pivots. So it was really a bloodbath into the close there Friday. So heads up on that, because I mean we're going into the first of the week and all the pivots to start the week. Being below the weekly pivot, it is a really bad scenario to start the week. And it's hard to get anybody to come in here and buy this up until we start breaking back above those weekly pivots. And so we'll see what happens from there. I'm sorry, this is a little bit longer than normal. So I did want to float that idea that a lot of stuff has gotten broken here. And I just cannot see us having a green open Monday morning. I just don't see it. I mean, I really think that we're probably Monday going to be putting in new lows sometime Monday, maybe right out the gate. So I do want to float that idea. I think there's a lot of damage in this market. Heads up. Okay, thanks for watching.